Hello and welcome to the Reorg, where we dive into the Satoshi Nakamoto Institute archives and re-examine old ideas after years of accumulated proof of work. This is your host, Michael Goldstein, also known as Bitstein, and joining me as always is my co-host, Pierre Rochard. Pierre, how are you this morning?
Doing very well. How are you?
I'm doing great. I'm very excited about today's episode because we're talking about what I think is one of the most underrated articles in the mempool, and specifically the S&I mempool crash course that we've been going through. So looking forward to talking about that. We've been working our way through this. You know, as a reminder, if anyone's new to listening and they're hopping in now, first of all, you should start at the beginning. But you know, we've been going through the monetary policy of Bitcoin, the sort of original value, why it's not a bubble, and why it would continue to grow, the reasons and values of hoarding Bitcoin and how that benefits the network and actually is where the value of Bitcoin comes from. We've gone into altcoins and many of the reasons why we've been skeptical of altcoins all these years and continue to be skeptical to this day. We've talked about the volatility, and we last finished off a bit of a discussion about the sort of marketing of Bitcoin and whether certain marketing strategies are a negative for Bitcoin and need to be squashed, or if we can have a just very, very open, collaborative marketing experience, a distributed marketing department. And today, we're getting into kind of the hoarding side again. It's something perennial topic for us. And we're going to be talking specifically about the concept of a unit of account and why Bitcoin might already be a fantastic unit of account. And it brings us to the article where the title states the answer, which is Bitcoin is the best unit of account. And this was written on May 10th, 2014. The price was around $457. And before I start, just right at the beginning, he talks about an earlier article where he was conceding too much on this very topic, and that was, if you go a bit back, that was the I Love Bitcoin's Volatility article from January 2014. So this was about 3.5 months later, to give us some context. And as a reminder on that historical context, this was right after there had been the largest bull run thus far. Bitcoin was over $1,000. And during this time period, Bitcoin was coming down from that to a lower point. And it would spend kind of a few years in the sort of, say, 250 to 500 range down from that all-time high. So this is sort of being written in the aftermath of a bubble and thinking about unit of account, including despite the fact that we're dealing with volatility and we're dealing with these wild swings and hype cycles. So it's a short article, so I'm going to go ahead and just read through it before we hop into discussion. So without further ado, in an earlier article, I conceded too much and suggested that Bitcoin doesn't need to be a unit of account. What I should have said is that Bitcoin is a great unit of account, much better than the dollar. The objection that Bitcoin is not a good unit of account actually hides a circular argument that invalidates it. Bitcoin's utility as a unit of account depends on what you already believe about Bitcoin. If you are skeptical of Bitcoin, then it makes no sense to use Bitcoin as a unit of account. If you believe that Bitcoin will become the world currency, then it makes no sense to use anything else. You want to end up with as many Bitcoins as possible, so it makes sense to price any investments or ventures in Bitcoin. That's how you know if you are winning or losing against your benchmark. Thus, to say that Bitcoin will fail because it is a bad unit of account is to say nothing more than it will fail because it will fail. There is, of course, no objective unit of value that is measured with a unit of account. This is why it is possible for two people to prefer such wildly different behaviors from their units of account. Someone still lost in the dollar world looks at Bitcoin and sees wild and extreme volatility, whereas someone in Bitcoin looking back at the dollar sees the worst and longest economic crash in history. And there is a chart here, and what it is the S&P 500 priced in Bitcoin, and it's also a log chart, and it's just this absolutely brutal decline in the value of the S&P 500 from about mid 2010 when Bitcoin was getting its first kind of real market price, all the way through nearing mid 2014 when this article was written. And you can see where the hype cycles had been, but the actual when you flip the denomination, so you're using Bitcoin as the unit of account, all you see is this incredible crash, and a prolonged crash, one that it has a very clear trend line, and the caption points out that it is the worst recession ever. And I'm here to say that it was not a transitory recession. This is a recession that has continued to this day with basically the same aggressiveness. So something to consider while going through the rest of this article. Upon entering the Bitcoin world, one gradually realizes that dollars make a lot less sense in this new world. Suppose, for example, that one considers getting into Bitcoin mining. The most important question is whether the mining rigs will mine more Bitcoins than they cost. Dollars don't enter into question at all. Other businesses that perform Bitcoin-related services also must think similarly, because one must always ask for any investment in the business. Did it earn as many Bitcoins as it cost to create? Okay, sure. So sure, Bitcoin accountancy works within Bitcoin. What about interacting with the rest of the world? This also works fine. In fact, it works great. It just means that all prices in Bitcoin are rapidly falling. What's the problem with that? That's just Bitcoin's way of telling people to keep holding it. It just feels like everything is becoming rapidly cheaper. Not a bad feeling. Not bad at all. I feel like I went through a subtle psychological shift recently. When I use dollars, they feel like play money to me. Buying with them feels like using the colorful foreign cash during a vacation overseas. It no longer feels quite like real money. Bitcoin is my unit of account. And then an addendum, July 15th, 2016. So this was 2 years later that this is being added. An observation I made today upon investigating something interesting happening in current events is that the price of ethers, as listed on ethereumwisdom.com, is listed first in Bitcoin, second in US dollars. This is interesting and a little ironic in the sense of a player in a drama who does something without understanding its full significance, because it means Bitcoin is seen as the primary unit of account for the people investing in ethers. This Reddit post also suggests that Bitcoin is like a unit of account for these people. I guess Bitcoin must not be such a terrible unit of account if that's what people are using it for. I want to talk a little bit about why this might happen. In the short term, cryptocurrencies tend to trade against the dollar in the same way. If Bitcoin prices rise or fall against the dollar, then other cryptocurrencies will tend to move similarly. From the standpoint of someone trying to choose between Ethereum and Litecoin, the price changes common to all cryptocurrencies are uninteresting. If the prices of ethers and Litecoins are compared in terms of a common denominator which moves with them, then their similarities are less evident and their differences more evident. A specialist would want to look at them in the way that most emphasizes their differences. Investors have chosen to do this by comparing prices in terms of Bitcoin. This makes perfect sense. Among people who think cryptocurrencies are going to be a big deal, you really want to compare everything to Bitcoin because it's the most obvious winner here. The irony is that once you start using Bitcoin as your unit of account, then you're using it like money, which means that you're not using your altcoin investments as money, which is the only thing they're good for. I really like this development because it shows that people are getting more skeptical. The more people start to compare everything in terms of Bitcoin, the more they'll start to demand something that's actually useful. Yes, but is it really going to be Bitcoin? Beat Bitcoin? Is the question everyone should ask first about any investment in the Bitcoin world. And that's Bitcoin is the best unit of account. Pierre, you're the one with the accounting degree. So I thought I would hand off, the mic to you first for your impressions on this article.
Yeah, so 100% makes sense. And I'm thinking back to an accounting course I had where in advanced accounting, they talk about multi-currency situations. And I've actually worked at companies where we had a multi-currency environment because, we had entities that were all over the world. And something that's interesting is that they basically said that you got to use the local currency unless like something crazy is going on, like hyperinflation, which makes it completely unusable, which really sets like a high bar for how much the local currency inflation can distort the accounting, because if you're using an inflating currency, you'll have issues like, oh, we're making all these profits, but if you actually, were to look at it realistically, you're not actually having all this profit growth. It's just the value of the currency that's going down. So with Bitcoin, obviously you have the opposite. You have the value of the currency increasing, and so you might look at it and say, oh, we're making our revenues are going down in Bitcoin terms over the years as Bitcoin's value appreciates relative to the business. And I think that, on one hand, you could say, oh, well, that's misleading because, maybe the business is doing fine. On the other hand, it does show that there's an opportunity cost, which is that if you have dollars tied up in the working capital of the company that could have been holding Bitcoin, then you missed out on the value appreciation of Bitcoin. So I think that if this is, and people will say Bitcoin's too volatile to be a unit of account. It depends. So if you're talking about it in terms of, we're going to have, let's say, an employment contract denominated in Bitcoin, and it's going to be like, okay, we're going to pay you 1 Bitcoin a year, and then Bitcoin's value increases, and you kind of just automatically gave that person a raise, then that's probably not going to work out very well, unless the employer is hedging somehow. But in terms of just keeping the books, where you're looking at, okay, well, what's our profit and loss? Yeah, if as the article points out, if you have this long-term view that Bitcoin's the best money, then all of your opportunity costs should be Bitcoin denominated. And I think that's a tough pill to swallow for folks because they want to do things. They're like, they want to have a cash flow, run a business, have an operating business, and to them it's like, well, what's the point of life if you're just sitting there and holding Bitcoin? And furthermore, if you zoom out from a macro perspective, it's like, hey, look, if nobody runs a business and everybody just holds Bitcoin, then the economy will collapse, which is just parallel to the anti-hoarding arguments. And we're seeing it now as we speak. There's all these publicly traded Bitcoin companies that are coming out that are, their business model is basically, we're going to just buy and hold Bitcoin. And I feel like that is the intellectual end state that you come to after being in this space for more than a decade. You're like, okay, yeah, the only thing that makes sense is just buying and holding Bitcoin. And then, everybody else is like, well, that's crazy. Why would we have investments, right? Companies, stocks, where you buy the stock and all they're doing is holding Bitcoin. And it's like, okay, on one hand, I get your point. But on the other hand, there's hundreds of millions of dollars worth of public company stock out there that is not just holding Bitcoin. And they are destroying shareholder value by investing in whatever they're investing in, whether it's even AI, right? Like, people will point out that Strategy has outperformed NVIDIA. It's like, yeah, even the most productive use of capital outside of Bitcoin still underperforms Bitcoin. And so I think that what what causes people to think that it's a problem is that they're thinking in terms of equilibria. And so they're just mapping the current equilibrium for these small percentage of the market companies and mapping it onto the whole economy and saying, oh, okay, well, the economy is going to collapse because everybody's just going to be holding Bitcoin and not producing any goods and services. What they were missing from that equilibrium model is the process of how we get there would cause the Bitcoin price to skyrocket. And then eventually the gains from holding Bitcoin would be less than the return on working capital and, actually investing in goods and services. It's just that we're not at that flippening. That's the real flippening, is when does it make more sense to invest in NVIDIA versus investing in just buying Bitcoin? And we're still very far from that, I think, because we still have less than 1% adoption. So I think that's, which is wild because this was written 10 years ago. So it's very prophetic. But if you had not been using Bitcoin as your unit of account this whole time, then you would have had massive opportunity costs along the way. And so hopefully everybody who read this article followed Daniel's advice and used BTC specifically as their unit of account.
And hopefully people listening now will start to change their perspective on this as well. Yeah, I mean, it's got to be the most humiliating thing in the world for all of us. When we say stay humble, stack sats, we mean it, because that's really what this article is saying in many ways. You have to stay humble in the sense of recognizing that you think that you have all these valuable contributions to the economy or whatever, but as everything is getting repriced, maybe what you thought was valuable based on invalid signals or debased signals don't really hold up in a different economic environment where you have Bitcoin appreciation going on, and it might into the future, like you're saying, once there is this equilibrium and you can actually get returns on capital again, maybe these things will get repriced in. But for now, sometimes you do have to accept that actually the best use of my sort of economic energy is to literally just stay humble and stack sats and sort of and recognize that some of the things that you might want to do to stack more sats don't actually have the profitability that you wanted it to have.
Yeah, and I feel like the only businesses that make sense in that context is just basically service businesses, because time passes by, and so you have to spend your time. And so if you spend your time earning money by providing services, then you're not having to tie up capital. And the worst businesses in this environment are the capital intensive businesses, right? So it's like, okay, I'm going to run an airline, so I've got to buy an airplane for $200 million. It's like, well, you could have put that $200 million into Bitcoin. And so that is a huge opportunity cost versus the pilot who's like, well, I'm going to, this time is going to go by. And so I might as well earn it piloting this aircraft, and then I'll put the profits into Bitcoin.
Yes. Yeah. The guys slinging rocks for Bitcoin, they know what they're doing.
Unless they own the excavator, but we can have Stoney on and ask him about, maybe he's leasing. I think it would be good to lease it so that you're not tying up all that capital.
Yeah. It's sort of like the, sell your house, the sort of sailor commentary about mortgages. Apply that to all of your capital.
You should want to rent everything, right? So don't buy a motorboat, just rent it, et cetera, et cetera.
Yes. Well, and something also to note to the people who are very, very concerned about all of us going hungry and dying or something like that is, or that we're just kind of going to lose a sense of, industrial capacity or something. This is actually good for all of that, because the point of having a unit of account is that we're trying to do rational economic calculation and look into the future. And the better system that we have for doing such a thing. And Bitcoin is as we've discussed ad nauseum, it very much is the best sort of sound money technology that we have available to us. That means that all of the capital is going to be able to go towards its best use. And in the future, that means that we're actually going to be able to make better use of all of that capital than we are today. That is why people are making these economic decisions. It's not a cataclysmic thing or anything. It's people making rational economic judgment about their future opportunity cost. And through that process, in the future, we'll have better industrial capacity because capital will be priced in such a way that it can actually be put to its highest use according to real monetary signals and prices. And so we can expect, better things to come out of it, as opposed to, take this to its logical extreme the other way, where you have, something like a Soviet economy is like you might make some like cool tanks or something like that, but it also comes at the cost of, bread lines and starvation and such. So a sound money would make sure that you're not just merely making things for the act of making things. You're putting all of the capital in the economy towards its highest use. And so this is a good thing. And there's some ways where it can be sort of humiliating and humbling. But at the same time, in the long run, this process is helping all of us better align our values with the scarce resources that we have on hand. And we should be excited about that. I think another thing that I really wanted to dive in here, it's actually something I believe you were the first to kind of make me think about this, and it was kind of in conjunction, with this article and the ideas around it. But this idea that unit of account is actually like a highly subjective concept. And this is like one of those things we've discussed the problems of people talking about money and generally accepted medium of exchange and how these can, they can obfuscate actual economic reality from the people talking about it because they're missing out that, okay, maybe something's not the most popular medium of exchange, but it's still a growing medium of exchange and one that we should take note of and understand why it's growing and so on and so forth. And I think a similar thing is happening here. So with the generally accepted medium of exchange idea, it's like, well, it's not money until everyone's using it as money. And with the way that a lot of people talk about the concept of unit of account, I think what they tend to think is when I go to the store, what is going to be on the price tag? And that number has to do with a lot of intersubjective economic, kind of consensus and emergent order. But just because something's on the price tag in a certain way, that's communicating in one currency the price of a good. But with any competing medium of exchange, you can always, as long as there is a price, you can do some quick calculations. You can easily calculate based on what the given dollar price of Bitcoin is. You can calculate what the Bitcoin price is for any good that's at the store, as long as it has a price tag at all. And so you might not have a generally accepted unit of account, so to speak, where it's one that signifies that a medium of exchange has grown so much that it is the expected sort of demanded good in the marketplace. It's the most liquid one that everyone's kind of operating with. But you as an individual can still operate with your unit of account because your entire conception of profit and loss, the reason why you have accounting in the first place, you are accounting for all of your assets and liabilities and trying to make a decision about what to do with them. And we call that, successful uses of it, where it brings in, a positive effect. We call that, profit and, otherwise a loss. These things are individual and subjective and ultimately psychological. And so unit of account is something that an individual can do. And so when people kind of have this assumption of Bitcoin not being a unit of account because you go into the store and it's not priced, that's ignoring what are the actual behaviors of people on the market. And most Bitcoiners that you talk to, they have this instinct of, well, I could get this cup of coffee, but, and they, do the quick math. It's like, oh, it's going to be this many Bitcoin. And they kind of do quick math of, what is the sort of expected long-term purchasing power of that? And they think, no, I don't really want it. It would not be, I do not believe that it would be profitable to buy this cup of coffee because of the opportunity cost shown by the Bitcoin. And that is using it as a unit of account. But then you also have the people who say, well, those people they're still operating in dollar terms because, when they're doing the purchasing power, they're thinking, oh, $10 million, and that's a fiat number. So they're not really using Bitcoin as a unit of account. But really, it's the same thing. It's just saying, we haven't seen all of the sort of price constellations develop around Bitcoin. And so the fiat numbers, they do exist for us to be able to do rational economic calculation with. And by rational, I mean literal, ratio, like being able to do arithmetic on the quantities we have available and how, and then apply our own values, valuations to those quantities. We do have those prices available, so it makes sense to be using them. But ultimately, if that person is then saying, okay, well, would I rather have more or less Bitcoin rather than thinking, would I rather have more or less or fewer dollars? They are ultimately using Bitcoin as a unit of account. So I don't think that any of those arguments hold up very well. I think that really taking unit of account as a highly subjective concept is in my estimation, like the most praxeological way of looking at it. And just it's most in line with reality. And it also helps us better through these transitory periods where things are shifting so wildly. It's only at the equilibrium where you can kind of see these general tendencies. It's like you have to look at you have to do the methodological individualism and think through what is going through the minds and reasoning of every individual on the market such that this thing can even be emerging in the first place. And yeah, I think this is just such an important concept. And it is interesting, though, is like, at what point, is there something special about that point? And I guess we'll wait and see of like when things start to flip and something you could almost say that those price tags that is when it is, quote, generally accepted, because it's grown enough that people have this expectations that both sides of the trade are thinking in Bitcoin terms. It is interesting, to think maybe there's something that we can analyze about what it is about that moment. If there's like a phase shift that we can know or sort of consider a priori, and that's something that we can all sit around and work on, and then see what actually happens, and see how good our explanations kind of match reality and such. But yeah, that's kind of a big takeaway that I have from this article.
Yeah, I agree.
Do you have any other kind of takeaways from accounting? I think there's other things that might be useful to talk about here is just, Bitcoin accounting in general. Does Bitcoin change accounting in any way?
Yeah, no, not at all. Unfortunately, for those who argue for triple entry accounting. So I don't know if people have heard of that concept, but basically they're like, oh, now you have your debits and your credits, and then you have the blockchain as the third piece of the accounting system. And it's like, well, not really, because any accounting system, ultimately, yes, it does get sources of data from third parties, whether it's a decentralized blockchain or your your bank account, but you wouldn't call that triple entry accounting just because there's a third party source to the financial information going in. The other part would be obviously the subjective part, I think you hit on. There's also like on the question of producer goods, I think that like producer goods are overvalued today. They have a monetary premium, just like housing does. And so that causes it to be more expensive for new entrants. And you could imagine a world where buying a factory is a lot more affordable in terms of real purchasing power. And so then that means that let's say, so if you're an employee and you are saving up your money because you eventually want to start your own business, with Bitcoin, you get, I think, the benefit of, if you're saving in Bitcoin, it will be sooner that you will have enough money, enough purchasing power to start your own business. And that in Bitcoin terms, the cost of the means of production is decreasing for you. And so there's an entrepreneurial angle there as well. But yeah,
I think that's interesting. Obviously, like software is something that comes up a lot. Like it's way easier to start a software business today than it was, even a decade or two ago. And it basically, in many ways, the capital costs are practically zero. You can just, at this point, you can get on Replit and you can just say what you want and it'll make an app for you. That doesn't mean it's going to be an incredible, revenue generating app, but like you can just get things off the ground very, very easily. And what's interesting to me about that is people talk about, Bitcoin in the future being, $10 million or some of these high numbers. But in many ways, yes, the raw numbers might be something like that. It could also, literally be infinity if the dollar ceases to mean anything. That's dependent on if the dollar chooses to denominate itself in Bitcoin or not. But in that future, let's say you have this $10 million, I think it's important to point out that Bitcoin's even more bullish than that. And we have things like, Saylor saying, it's going up forever, Laura. And that's true because with a sound money economy, the growth will continue as long as, like, if the sound money is coordinating production, which means more goods on the market and more goods being priced by the same fixed amount of money means that the price of that money will go up. And so that's true, but there's also the side of it where it's like, well, but if the sort of technological growth, if all of these things can have feedback loops such that the rate of growth might very well be faster than we're thinking about in the economy as well, such that, yeah, you get to this point where, you imagine $10 million and you look out in the world today, it's like, okay, well, what kind of factory could I get for $10 million, for a Bitcoin? And you might think that way, but that discounts the possibility that the way that we relate ourselves to capital because of this giant repricing means that actually one Bitcoin gets you way farther than that mental model suggests. So it personally, it makes me even more bullish. Like once you get to that Bitcoin future, you're looking at an even greater Bitcoin future.
Yep.
So another thing I think to touch on that I'd be interested to hear your thoughts on with regards to sort of Bitcoin accounting. So obviously the principles of accounting don't change, but to me, what I do imagine is that as Bitcoin grows, we started and it's like, okay, what is Bitcoin? It's like, well, you download Bitcoin QT, now known as Bitcoin Core, and you have this, kind of like very, very power user just like very, very Linuxy wallet on top of this clunky node. And you kind of have that, and you back things up on a wallet.dat file and so on and so forth. And over time, we've seen a lot of different tools being developed, and we have a lot of services now of like things like BTC Pay Server that kind of sit on top of a node and handle various payment stuff. We have things like Zapright, which kind of do it from a invoicing standpoint. It feels like the accounting aspect of Bitcoin and actually being able to work with it in that sort of business accounting mindset, it is a very fruitful place to think about the kind of software that would be valuable for people, because it's so much infrastructure that actually has to be built. We actually have to, like, you at one point had made a Lightning QuickBooks plugin. And it's like things like that are going to have to be built, and they're going to have to be built at scale. Like if Amazon wants to use Bitcoin as its unit of account, they're going to have a lot of software that needs to be built. So would you agree that that's probably a highly fruitful area for tech development?
I mean, I guess sort of. The thing is that all of the accounting software at scale out there has multi-currency already in it. So Amazon is used to operating in dollars, euros, yen, et cetera. So it's kind of just adding like a ticker symbol in there. So then there's the kind of the edge point of the Lightning invoice that, BTC Pay Server and Zapright do really well. I think that Tesla actually used BTC Pay Server when they were accepting Bitcoin for their payments.
I think so.
But then there's another one. Their name escapes me now, but their Steak and Shake is using them. So I don't think it's a huge lift on either end of like what's really called the ERP software, enterprise resource planning software, that's like Oracle and SAP. They're used to multi-currency, and so although it's interesting because I'm usually anti-bits. There's an argument to using bits in the accounting software because all of the other currencies have 2 decimal places. Not that it matters, because then there's like, oh well, what if you're using millisatoshis? Like now you need to. So that's probably the biggest debate would be what denomination to use when you're plugging it into your accounting software.
Yeah, although of course, all of Bitcoin is ultimately just, integers. And
unless you're using Lightning, like you can use millisatoshis in Lightning, and so if you don't use millisatoshis in your accounting software and you're using Lightning, then you enter into the Office Space situation of the Lightning developers rounding the numbers and making money off you.
Yes, that's a good point. So you actually think that it's going to be fairly easy. I guess I was imagining, just that the one particular, sort of integration point with, dealing with, I guess it lends itself from like, partially self-custody, but getting from the UTXO model into these sort of accounting layers to be able to tap these things into. But I suppose that's not something that like every business is going to have to create for themselves or anything.
You're right that is a challenge. Yeah, well, we'll see. But if you're using BTC Pay Server, you can export like CSVs that abstract that away, so that that accounting is done by BTC Pay Server, not by your like NetSuite or QuickBooks side of things.
So the biggest thing, I guess, QuickBooks and such, they need to get on the Bitcoin bandwagon, and they need to understand that they should see where the winds are blowing and anticipate it and start building Bitcoin integration so that people can properly track their accounting in Bitcoin terms.
Yeah, and the other interesting thing on the public company side with Bitcoin accounting was that until about a few months ago, really, you were required to, if the Bitcoin price went down, you had to show that you had a loss. But then when it went up, you couldn't write it up and show a gain, an unrealized gain. But now they changed it. So now you can show an unrealized gain, which I think is going to be really helpful because a lot of Wall Street just kind of runs on the really good Wall Street analysts will go into the financial statements and figure problems out like that and say, oh, okay, so this financial statement isn't quite accurate from an economic perspective because it's not reflecting the real market value of the Bitcoin. So I'm going to make an adjustment here. But a lot of Wall Street analysts and kind of all the automated systems around it don't do that. And so they might have been looking at wrong numbers when looking at companies that hold Bitcoin on their balance sheet. Going forward, though, they will be looking at the correct numbers and they'll lose their minds because they'll be like, wait, you had like this massive gain here. What was that? The other issue, though, is there's a tax issue. So the IRS for corporations has this alternative minimum tax. And it has it for individuals as well, but this is particularly a problem for corporations with Bitcoin gains is that if you don't sell any Bitcoin, then you don't realize any gains, and so you don't have to pay any capital gains tax in the US. But if you're not paying enough taxes, and I forget the specific rules, but basically you get kicked into this thing called alternative minimum tax, where they look at, okay, well, what do your financial statements say? And if you have all these unrealized gains on your financial statements, they could tax those. And, people are pointing to this being an issue with MicroStrategy, now Strategy. But hopefully they are able to lobby in DC to avoid this problem because it's really bad to get taxed on unrealized gains like that.
Right. Well, on that specific, the change in accounting, and I forget what that was called.
Fair value.
Fair value, yes. That's basically big because it basically it allows companies that do choose to use Bitcoin as their unit of account to actually express those numbers in the dollar language that other people want to continue to use, and get to show just how good of a unit of account Bitcoin has been in dollar terms. Whereas before that, they were completely kept from being able to show just how much winning was going on.
Yeah.
Well, great. Well, like I said, I think this is, it's a very short and sweet article, but I think there's so much packed into it. And, this really is key to, I think, so much winning that a lot of Bitcoiners have. Also, like I said, concepts like stay humble and stack sats are very rooted in the ideas that are being expressed here. And so very, very happy to get to share this article again.
And people will there's this kind of meme out there of, okay, first Bitcoin's a store of value, and then it's a medium of exchange, and then far in the future it'll be stable enough to be a unit of account. And let me warn you, if you don't adopt Bitcoin as your unit of account today, you're going to regret it later.
Yeah, it turns out it's all three. It's everything. It's the best money, and it's the best money now. And it just requires thinking about what that means, over the short, medium, and long run. But that's also a topic that we'll go into next time about more on these supposed three functions of money and how Bitcoin might shed some better light on how to think about those concepts.
Yeah.
All right. Well, thank you for joining me. And
having me on. This was fun.
Yeah. Thank you for listening to The Reorg. This podcast is brought to you by the Satoshi Nakamoto Institute, dedicated to advancing and preserving Bitcoin knowledge. Our mission is to deepen understanding and appreciation of Bitcoin, not just for today, but for generations to come, by creating enduring educational resources and generational knowledge for generational wealth. If you enjoyed the show, please support our work by sharing links, deepening your own Bitcoin knowledge by exploring and studying the SNI archives, and contributing sats. As a 501c3 nonprofit, we rely entirely on supporters like you. Whether you can give a few Satoshis or a few thousand Bitcoins, your contributions enable us to continue educating current and future Bitcoiners worldwide.